It's Thursday, July 2nd. Here's what investors are watching in Korea today.
I mean, if you're looking at the markets, you're seeing this massive contradiction right now.
Oh, completely.
Right, because on one hand, KOSDQ is throwing this 30th anniversary rally, closing at 929.35. But on the other hand, we just survived a brutal month of record forced selling.
Yeah, and that sudden credit freeze sparked by JoongAng Group's court rehabilitation really has the whole system on edge.
Exactly. So the mission for this deep dive is fast-paced. We are unpacking what just moved the Korean market and identifying the critical signals you should watch next.
And the patterns here are, well, they're pretty intense. We have all this conflicting data flying around, but the actual mechanics behind June's extreme volatility really cut through the noise.
I mean, let's just look at the sheer scale of that volatility for a second. We saw a staggering 1.12 trillion won in retail margin call liquidations last month.
Wow, yeah, that's heavy.
I know, it's roughly 800 million US dollars just forcibly ejected from the market. And that pushed Korea's volatility index, the VKOSPI, up to 97.78. Which is huge. I mean, we haven't seen that level since the 2008 global financial crisis.
Right.
And it's crucial to understand how that $800 million actually, physically impacted the market structure. Because when retail investors can't meet margin requirements, brokers don't wait around.
They just pulled the plug.
Exactly. They automatically liquidate those positions. Yeah. So that massive flood of forced selling trips, the exchange's automated algorithms, which then abruptly halts the market.
So that explains why we saw 3 full circuit breakers and 10 sidecars triggered last month.
Right, yeah.
And sidecars are those 5-minute suspensions of program trading, right? To halt automated futures and options execution.
Yeah, you got it.
Right, so they were firing off constantly because the system was basically choking on all that automated selling. It feels like a controlled forest fire.
That's a really good way to put it.
Like the exchange is letting $800 million of retail margin just burn off the dead wood. And now they're coming in with strict new rules to make sure only the strongest trees are left standing.
Right, to stabilize the market for foreign allocators. KOSDQ is indeed using its 30th anniversary to aggressively clean house. They're implementing strict new delisting rules targeting penny stocks.
Specifically companies with a market cap under 20 billion won, I think.
Exactly. And to attract that foreign capital, they're launching a premium tier called the KOSDQ Select Index.
Okay, so the equity side is purging the weak links to build a cleaner foundation. But here's where it gets really interesting, because individual corporate actions completely contradicts the broader credit panic.
Oh, you mean the Samsung Heavy Industries move?
Right. Their executives just bought 640 million won, which is about 460,000 US dollars of their own shares, right after a 19.5% drop in the stock.
Which is a massive signal.
But wait, if the credit market is supposedly frozen, why are executives throwing $500,000 of their own cash into their stock?
Yeah.
They must know something the bond market doesn't right.
Well, insider buying is usually a strong signal of confidence, sure, but you have to look at the mechanism driving the credit freeze. JoongAng Group filing for court rehabilitation shattered the illusion of safety in the debt markets.
And court rehabilitation is basically South Korea's version of corporate restructuring.
Exactly. So when a massive entity like JoongAng suddenly files, investors instantly assume, well, if they can fail, anyone can.
Ah, so it triggers immediate contagion. The bond market isn't looking at Samsung's internal metrics, they are looking at systemic risk.
Precisely. Right now, there are 663 billion, so approximately 470 million US dollars in BBB-rated public corporate bonds maturing before the end of this year.
That is a lot of debt coming due.
It is. And the risk aversion from JoongAng is spreading so fast that investor appetite is just vanishing. It's forcing companies like Doosan and Hanjin, and incredibly even some A-rated issuers, to completely pause their refinancing plans.
Wow. So we've got this bizarre tug of war. Equities might actually be primed for a bounce because all those weak hands just got forcibly washed out by margin calls, but the credit market is telling us the actual structural risk is flashing red.
Yeah,
Well, as KOSDAQ aggressively purges its weakest links and lets the margin fire burn out, while credit simultaneously gets tighter across the broader system, will the surviving companies actually command the foreign capital they are so desperate for?
that is the million-dollar question.
Watch the hashtag KOSPI.